Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the chart of US dollar index DXY in front of us. So as we all know that we have an important event, CPI. So as a result, you can expect that there will not be much volatility and craziness in the market. Because before a major event like CPI and FOMC, market prefers to stay silent. So DXY was trying to cross the level of 106 for the last couple of days. It was struggling. And ultimately, we can see that DXY showed some correction and right now standing at 105.67. As we have a gap around 106.60 on the chart of DXY, so we discussed about the possibility of DXY going up. Why we were discussing? Because if DXY starts going up, then obviously there will be pressure on the chart of gold. But we can see that right now DXY doesn't have much volatility. As a result, before CPI, there is no chance that DXY will be heading towards this level. After CPI, yes, there is a possibility of market going up. I'm not trying to predict the market after news because nobody can do that. But before CPI, hardly you will see much volume or craziness in the market. Okay, so overall, the strategy on DXY is still the same, not only for gold but for other pairs as well. That if DXY crosses 106 level, the next resistance will be 106.20 and then 106.60. And once market will hit 106.60, the gap will be filled. And right now that market is sideways and market will remain sideways. And if you go to the economic calendar, you can see the CPI coming up at 7 p.m. in my country. So if you don't know the exact time, just go to the forexfactory.com and change the time zone so that you can be ready and prepared at the time of news. So beginners, new traders, traders with low capital, do not try to gamble with your hard-earned money because market will give you plenty of opportunities to make money. Don't try to gamble. Be a trader, not a gambler. Don't forget that. You can see dollar steadies ahead of key inflation data. So the dollar index steadied around 105.60 on Tuesday as investors geared up for a key in US inflation report that could provide clues on the path for Federal Reserve monetary policy. Gold flat ahead of US inflation test. Gold was little changed around 1945 announced on Tuesday as investors cautiously awaited a US inflation reading that could influence the outlook on Federal Reserve monetary policy. So today's CPI is important because this will shape the next monetary policy by the Federal Reserve. Okay, so that's why market is mostly eagerly waiting. Now, let's look at the chart of gold. So if you have been trading for last couple of months and years, then probably you know it very well that before a major event, hardly there is opportunity hardly there's any opportunity in a market before a news. So today also we can see the same thing here. So when the dollar showed correction, when the dollar showed selling yesterday, gold also showed good amount of buying power. As a result, 1945 did not work. And if you remember correctly, I told you guys that 1945 is a weak level, so you need to be careful and volatility will be important. So 1945 failed because the volatility was high. But yes, our level of 1950 worked. We can see the market showed reversal from 1950 and hopefully you guys made money. Market did not hit the 1950 level precisely, but as we all know that the levels work as zone in the market. So more or less we can see the yes, our resistance work. And right now gold is standing at 1945. If we look at the market structure, then the market structure is still the same, no difference. We can still see the market is still forming lower highs in the market. So buyers are still are present, but they do not have the dominance in the market right now. and as the volatility of the market is low, so before CPI, okay, we will be switching to the 15 minutes time frame to find out the trading opportunities, because if you just stick to a higher time frame, then you will not find anything. So as you can see right now, we are on the 15 minutes time frame. Okay, so you can see there is not much volatility. The market is more or less sideways. So during the day before CPI, if gold drops, then your first level will be around 1942, because we can see market is more or less respecting FIBO 23.6% here. So this gives us the confirmation that our FIBO setup is on point. Okay, and if the volatility remains like this, observe the market around 1942 level. 1942 is the first support. If you see that after hitting 1942 level, market is bouncing, you can go for a buy position. In this volatility, do not expect much. 30 pips is also sufficient. Then we have the next support around 1940. Why? Because of FIBO 50% retracement level. Along with that, you can also see previous resistance will also be acting as support. A previous resistance acting as support, and FIBO 50% retracement level. So 1940 is a better level to go for a buy in comparison to 1942. But yes, you act like a day trader, act like a scalper. So observe the market around both these areas. So before CPI, observe the market around 1940 and 1942. If market bounces, hit the buy button and go for a quick exit by 25-30 pips. Okay. On the upside, let's assume the market starts going up. Okay, market crosses 1950. Then this will be a difficult decision, because overall the things have not changed. Overall, the structure of the market is still bearish. So as a result, okay, it will be better to avoid any buy position above 1950, because 1950, 1951, 52, this works as a zone in a market, and in this low volatile situation, there's a high chance of getting trapped. On the other hand, you can observe the market around 1950 level because of some reversal. Try to understand the market. If you want to break something, what do you want? You want force. If the force is not present, you won't be able to break it and you will return, isn't it? Similarly, if market goes up, let's say after a few hours, if you see market is going up, observe the market around 1950 area or 1949, 1951 area, around this level. If you see the market is going up with small candles, means market is going up, but market doesn't have force. Market is trying to break it, but market doesn't have the power. In that case, at one point market will reverse, then you can go for a sell. So as the structure is also bearish, so I will not suggest any buy position. Okay, try to avoid any buy position. And on the other hand, you can look for a sell around 1961 level, around 1961 to 1963, around this level you can look for a sell. But chances of market going to 1961, 1963 before CPI is very less. So still, the this is market is full of surprises. Okay, market loves to shock traders like us. So yes, you need to be ready. Okay, so before CPI, if market falls with and the volatility of the market remains like this, you can observe the market around 1940 or 1942 level. If market bounces, you can go for a quick buy position. Okay. And on the other hand, if market starts going up, observe the market around 1950, 1951 area. If market reverses, again you can go for a quick sell position. And before CPI, try to scalp if you have the scalping hand. And in case market surprises us with big upside, observe the market around 1961, 1963 area. This is the area where we can look for a sell position. After CPI, observe the market. If market takes a trend, try to follow the trend of the market instead of going for reversals. Okay, so um, nothing much to say, and I will not recommend any levels after CPI, because overall this was a trending market. Not this is a trending market. In trending market, the static support resistances are not very strong, and I cannot go with the dynamics also. So as a result, it will be better to take the decision, okay, instantly. It will be better to follow the trend of the market after CPI. And if you're a beginner, if you are in a very tight spot, can't afford to lose any money right now, my dear friend, please don't make the mistake of trading at the time of news. News trading is the hardest form of trading. Okay, so that's all, my dear friends. Bye bye, take care, and all the best. Do not gamble.